Let's talk markets now. With less than 24 hours until Nvidia reports earnings, an investor known for the big short sees opportunities in the entire AI space. Steve Eisman is senior portfolio manager at Neuberger Berman. Steve, it's always great to see you.
Thanks
You're listening to our conversation.
Looking sharp today, too.
Looking sharp.
I mean, real. Look at this. Just take a second.
True.
All right, let's just compliment my wife. We got to distance me and move on.
Valerie, nicely done.
Unbelievable.
But I was going to say, comment on Steve's mood, which is generally good, and you feel good about the economy as well. So you're listening to our conversation. How do you feel? I'm curious. How do you feel about the housing trade? If you are a believer that the economy is in good shape, the consumer's in pretty good shape.
I mean, the problem with the housing market is, people are stuck in their homes because they have 3% mortgages and they have jobs. So somebody's going to get a 7.5% mortgage to have the same monthly payment as the person with a 3% mortgage. The housing price has to get cut in half. Now, is somebody with a job going to sell their house and cut in half? No. So existing home sales are very weak. New home sales take share. And that's been the housing market for the last 2 years or so. I don't see it changing at all.
Okay. You are optimistic about AI, and we often talk about how Apple is perceived as sort of the laggard in AI. You think that there's a huge...
I think Apple's actually the hidden AI play, not exactly today, but will be, because everybody's focused on the chips and everybody's focused on the cloud. But at the end of the day, when there will be apps, and I have no idea when that's going to be, but when there will be apps that the consumer can use, they're going to want to use it on their phone. And I have a new iPhone, and I know for sure that when all those apps come on, my phone I'll need a new phone, and I'll need a new iPad, and I'll need a new laptop. And so when the apps show up, the biggest probably beneficiary is going to be Apple, because they're going to have a refresh of literally everything that they sell.
Does that same sort of trade happen with Microsoft, which just unveiled its new sort of hardware lineup that is AI equipped?
Partially. I mean, that's going to happen. But I don't know how much Apple... I mean, you're going to need to see people start to buy their laptops, and it's going to be probably need more than just Microsoft doing what it's doing. The apps have not come yet. When they will, and I have no idea when, that's when this whole refresh cycle is really going to take off.
So, expanding the AI discussion, last time you were here, you talked about Nvidia. I think you had said you had never seen an executive as confident as Jensen
and happy.
Huang.
He's happier than me.
Happier than you now
yes.
is quite a thing. But do you see, that's obviously not the hidden one, it is the most obvious one, but is that one that you still feel comfortable holding?
I mean, look, right now, the easiest way to play AI is Nvidia, AMD, a few other chip players, and then anybody who is in the cloud or with a massive database. Beyond that, there's Apple, which I just mentioned. And after that, it's not clear, because so much of what's going to happen is unknown. There's no way to know at this point.
Steve, to change gears just a little bit, we'd be remiss not to ask you your view on the consumer, whether you see weakening. As someone that's also obviously played that, and that manifestation in the past was through the banks, and as someone that's so successful for having made a call, so many people were trying to make that same call over the last year and a half. And it's on some level, it's actually even more impressive that you've kind of been in the other way, because I think the inclination for many investors was this is just a time bomb waiting to blow up. So what's the latest update from the front?
There's no time bomb. I mean, on the credit side, credit quality is fine. Credit card delinquencies are starting to come down. Charge-offs are kind of sticky, but they're at low levels. In terms of the health of the consumer, the upper-end consumer is in great shape. The lower-end consumer is having trouble with inflation, and it's showing up in their spending. And the middle consumer is kind of treading water. It's kind of the way it's been for a very, very long time. So I just don't see the consumer as impact. I mean, it impacts obviously certain subsectors, but it is not an issue for the overall economy.
There's that scene in When Harry Met Sally, I'll have what she's having.
Oh, yeah.
I mean, I'd like to have look at him. He looks great. He's happy Steve. I mean, it's fantastic. Congratulations on the transformation.
Thank you.
This is not a political show, and we're not getting into politics. However, you have a very strong view about this election coming up.
I definitely do.
What does it mean for the markets if you're right?
So my call is that with as much certainty as I could possibly have, I think Trump wins every single swing state and becomes president. And I don't think that has much implications for the market at all.
Really?
I mean, it'll have implications for certain subsectors. There'll be some more tariffs that'll impact certain subsectors. I don't think it has much
Do you think
inflationary
it's already
impact.
affecting the market right now?
No, not at all. I don't think anybody's really focused. I mean, the way I think this is going to play out is in August, when the Democratic Convention convenes in Chicago, ironically, all the protesters from all the campuses are going to convene in Chicago, and they'll burn the Israeli flag, and they'll burn the American flag, and they'll scream their heads off, and the whole country's going to watch, and the whole country's going to be aghast. And at that point, everybody will understand the election is over.